Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I'm Cody. He is Andy. It is the 24th of October, just about 4 o'clock Eastern Time, 3 o'clock Central Time. How you doing, bud?
I'm well. How are you?
I'm doing very well. Thank you for asking.
So it's a week away from Halloween to the day.
I know. Got your costume ready?
Of course I have my
Silly question.
Silly question. I've got the new batteries in it, the whole thing, ready to go. What about you? It's not the response that I feel like I should be getting from you. I feel like it should be like...
I had an idea and I kind of went away from the idea, but I have another idea that I just need to piece together. We got to piece it, right? Which is what Halloween's all about, right? Take your favorite things. You can't just order it from Amazon. That's not fun. You got to go shopping for it. You got to look for it. Thrift stores, right? Get excited.
Get excited. I'm excited for your costume. I didn't realize you were like putting this much like shopping effort in. You don't strike me as like the shopper.
Yeah, I did until 10 seconds ago. I didn't either. So probably just put my foot in my mouth. So this better be really darn good. As I'm talking through this, I'm like, oh boy.
Oh boy.
Oh
boy. You ever watch The Addams Family?
I have, yeah. I saw a lot of, we had like a mini trick or treat. I don't know why. It's really weird to me in the neighborhood here. A lot of Wednesday Addams walking past, a lot.
Okay. You could be Fester Addams.
That's a good point.
Yeah. Just give me something to think about.
A couple ideas.
All right, Fester. We had a request. So we have 3 charts today. 2 of them came at request, and one of them has actually come at request several times over the last month.
Okay.
And so I think we can safely say every chart was a request today.
Okay.
But the first 2 came from the same gentleman. He wanted to be called Dinker.
Dinker.
Dinker. D-I-N-K-E-R. Dinker.
Shout out
to Dinker.
We know he's watching. He's a very avid watcher.
Yes. First time caller, long time listener. Dinker. He wants to look at spot cheese, the block in the barrel, and then we're going to look at December milk after that. So thanks, Dinks. So I've been out of the loop. This is my first day back in several weeks. Mm-hmm. So I've been out of the loop. I drew this line right here because you had talked, I think last time, you had talked quite a bit about this little Gapparuski right here.
Absolutely. At $1.83.
So yeah, interestingly enough, I mean, we're basically stopping short of that number and kind of more or less hovering around all this noise when this bull flag was taking shape back in the day. Mm-hmm. Coincidence? I don't know. What do you think?
I think you and I were talking 3 weeks ago when we had that massive rally from $1.85 almost back to $2 in the same week, and it kind of felt like the same thing that we're seeing right now. Every time we got close to that $1.85 number, all of a sudden the selling kind of slowed a little bit on the CME. We weren't 7 or 8 cents lower in the block and barrel. I think today we were 3 1/4 lower in the barrel, unchanged in the block, and it just seemed, they were just kind of ticking it down, putting their toe in the water, feeling out the market. And as soon as one traded, futures probably went from 26 lower to about 11 lower up front. And it really feels like the same kind of trade is happening. I really want to go fill that gap at $1.83 just to get product out of the country. That's where we're told a lot of exports will get booked, is between $1.80 to $1.85. And you got that gap at $1.67-ish.
I agree. And I think if the futures are going to make, we'll take a look at these in a second, but if the futures are going to make, I think, another big leg lower, you got to get through this gap. And there's a lot of noise here. I mean, we haven't been $1.83. Let's go take a quick peek, Mr. Fester Addams, since May. I mean, it's been a while since we traded that price on average. So yeah, it's a big area, right? I mean, cracking through that price, I think the next stop is you got to go fill this gap here. You're talking about getting back down the mid to low 160s. I don't know if the market's ready for that right just yet. I don't know. Like I said, I've been out for a little while, but it seems like, to your point, you're getting some export business done. I'm really curious to see how the next month starts. So you'll have, we knew that there was, you think about like the previous month pricing, the way that model works. It certainly gave folks cause to kind of pause the buying a little bit, when October started, right? Because September was so high. But now that, October will clearly be lower than September, I think. So when calendar November begins, do we start to see buying pick back up as people want to pay the previous month's average of October, which, again, theoretically should be a much better price than September.
Right.
We'll see. I think that's one to be mindful of, but just thinking about from a chart perspective, to your point, this gap is key. We got to go fill it first if we're going to have another big leg down.
It almost feels like to me we're going to make a head and shoulders where, and this is in my opinion, Worst case scenario, we bounce between this $1.90, $2 for the next 3 weeks. We don't fill that gap at 220, and all of a sudden, we get back to $2 and then promptly fall off the face of the earth come December 5, December 10, somewhere around there.
Yeah, I agree. I think that's what we're getting ready to do. I think we have another little pop before, and I think it's, to your point, like this high is about 205. Right. It's also like the midpoint of this bar, which is when we really started to accelerate, obviously, right? It opened with this big gap and then really took off. So, yeah, I mean, to me, I think you got to go back and go test this area. I agree, filling this gap seems tough, but I don't think it's a straight shot down from here. Right. To your point, it seems like it's more of a let's go do this guy real fast. Yeah. Like I said, I think it's going to come based on that previous month buying I just talked about. We'll see before you go and test this guy again. We'll see. There's a lot still up in the air.
There is
a lot still up in the air.
And with getting back to $2, and then if we can get to $2 and then fall off, let's say mid-December, even rolling into Q1, I think you're going to see a lot of eager buying if we can get down to that $1.67 gap down there and fill it, because there's a lot of things in country that are going on the West Coast with milk production and animals and so on and so forth that are going to be around that same time period that we're talking about, where some of these reports, these milk production reports, are going to come out. What are they going to say? What are they going to show us?
Sure. There's a lot still to be said.
Yeah.
There's a lot to be said. So, but again, charting wise, we got to like to here, I think the longer we trade sideways, the more prone we are to a little bit of a pop that takes us back to like this 205 area. I think that's definitely in the cards. We shall see. Courtesy of Dinker, Dec Class III. He had some commentary about it, by the way, that I'll share with everybody here. It was more of a question. And he said, are we forming a W Dec Class III?
I was just going to ask you that, and I want to bring this up. I'm actually looking at it right now. Settlement stats this morning. November down 62, and December actually up 223 contracts for open interest. Class 3. Okay. That is Class 3.
So this low from this bar. So I guess what you're saying is that
the shorts, in my opinion, are the shorts rolling out and getting into longs, making this W.
Could be. I mean, that's certainly one way to think about it. Okay. Right. And so this low is 2020, right, from this bar. Yep. So basically, for this to be, a W, today's low is 2031. We're basically on the lows right now. We've got another, call it 12-ish, 13 cents. You need to get it closed below 2020 for this to just be another, continue to be a bit of a pig. This could, I could see what he's talking about, and I would agree that you have to be a little bit mindful about selling it here, just because of the potential for this W to take shape, and I do think it does for a brief period, just because what we talked about going to 205. When you think about like current cash, Dec at 2030, that's not really a premium, right? I mean, if like versus this current spot level, there really isn't much of a premium, if at all, in December. If you add premiums in to the NDPSR, check out Basis Loaded with Joe Schmidt, learn more about that. So there really isn't, like I said, there's not that much of a premium. So now you're basically, if you're selling DC here, you're basically saying that cash is going to continue to go lower from this price. There's no room.
I was going to say, I'm checking out the RSI on Dec Class 3, and it looks like we are making another bottom from the beginning of October, where we went to 220 and then rallied up and put another $1.50 on top of that, which, as you have said and taught me before, it's only a secondary reference, but I just found that interesting looking through it today.
All right, so this is what you're looking at right here.
That's correct.
Okay. I see what you're saying. I mean, it's like you would have liked to have seen it get through. Let me blow this up a little bit. You would have liked to have seen it get through this blue bar. That's like oversold. Kind of similar here. It was overbought over here. Here, it hasn't quite gotten there yet, but to your point too, like if it can't get below this 35 and has another little bouncer, like I would definitely like look at that and say that secondary indicators giving you confirmation that the W is forming, right? Mm-hmm. So yeah, there's some things creeping up here. So I agree with Dinker. It's certainly possible to get a W. And again, like if you're looking to buy it, where you're wrong at this 2020 year. It's not that big of a spread, right? I mean, you're basically paying, if you're, what is it, like call it like 15 cents with slippage kind of thing. But if it is, it takes you back up to, let's say 21 and a half. I mean, there's a lot of room here. Mm-hmm. So yeah, I mean, the risk reward's certainly there. I think, again, we've seen like if cash can't go down from here, then Dees would be a buy. I can agree with it. So thanks, Dinker. Appreciate it. Last one, certainly not least. We've had a lot of people want to chit chat about feeders and fats. So I just pulled up feeder cattle. What do you think here?
Volatility has slowed down in cattle here recently.
It has, but it's also had quite the move.
It's really slowed since we were in the June through August time period.
Yeah. So we've had this big move, and I think you and I kind of bickered a smidge about, I think it was Dees or October fats. Yeah. So you and I had this like back and forth about this W, right?
Mm-hmm.
So what's interesting about this is that it played out in a similar way for feeders, only that you had this new low that got completely reversed. So not quite the W you'd want to see, but it had a pretty healthy response. What I think is super interesting is the fact that you're not getting any sort of material or response out of the bears. This is it. Like, this is the best they can do right here. Like, that's very little, relative to going. You went from basically, call it 230 to pretty close to 250. And here we are at 245. That's barely a retracement. So I would argue that this is setting up a little bit more like what we saw in cheese. I would say this is shaping up to be a bull flag and has got another little popper coming in hot. If it does, I think you got to be super mindful of this price. And then I also think you'd want to basically take, like in this case, the measurement would be, I think you could safely say we broke out right here, right? And so you had like this, right? This seemed to be where the market started to really go. You had these three and then took off, right? So let's just use this. You would take here, plunk it right on top. Look where it takes you.
Bingo, right back to the hot line.
Right up in there, right? And so, and if you want to use, like, really dial it down, you really take it from that high, right? Because that's where it's going to break out from. So it takes you back into that. I think you got to be really mindful of its ability to go trade 260. This contract, at least, the Jan feeders. And, I guess what would be, like the inverse of that is you have this really big bar right here. Let's blow this up for a second. You have this big bar right here. And since then, it's just been it hasn't looked back since. I think getting in the middle of that would constitute us like a reversal, taking you back into here somewhere. So that would be like the point I'd want to be mindful of is this high. What high is that? 240.60. Break through 240.60, then I think it's a quick trip to 230. And
I'm glad you brought up the bull flag. I was not even looking at it that way.
So you, who likes to be bullish, wasn't looking at it in a bullish way. Is that what I'm understanding?
Well, I was going to ask, I guess, man, the more that when I stretch mine out and make it a little bit bigger, I was going to ask about a 5-wave Elliott theory. But now that I look at what you have drawn, and what I have on my chart, I see exactly what you're pinpointing there.
Yeah, I mean, it's similar. Here's the cheese. We talked about the bull flag here.
Yep.
It's very similar to here, right? You just take the measurement for where it broke out from and lay it right on top. So I think I don't know about that. I think you're going to see something very similar.
See, we're learning. We're all learning.
Learning something.
I appreciate that.
Learn it.
Okay.
Get learned.
Get learned.
I'm
All right.
my English. Yeah.
By the way, next week is our Halloween extravaganza episode that everyone seems to tune in for every year and loves.
How does your shopping spree go?
Well, it's going to have to happen this weekend, but I'll let you know. You can't just order from Amazon. That's not fun. You
just don't strike me as. I'm not saying it's I'm not saying that it's like that makes sense to me. Everything you're saying is making sense to me. You just don't strike me as like the kind of guy that we're shopping on the weekends.
I'm not. I'm a 7 a.m. shopper. Nobody's there. They're just opening the cash registers on the first one. Just not a big people person on the weekend. You know what I mean?
I hear that.
Yeah.
So, which surprises me that you don't want to go to the Amazon, but I'll digress. Like
I should. I might do a little searching on the
do a little searchy.
Let the fingers do the walking. All right, everybody. And with that, we appreciate you guys tuning in. Dinker, we appreciate the charts you wanted to look at. Hopefully we did them justice for you. And if you have any more next week, please let us know. Andy and I will be back for Halloween extravaganza next week. I think we're on the docket for Tuesday. So everyone stay tuned for a more than exciting episode next week.
Sounds good.